when I make that call, people ask, what do you like best? What's your favorite bet for the coming year? And it's become sort of a tradition. And I've made it copper again. When I say that, that's not to say I think that's the one that's going to go up the most. I'm looking at, the answer is risk adjusted. It's the one that I have the greatest confidence in, the most solid bet. And it's more specifically, the real question is, Lobo, where are you going to deploy your money? I was already long gold and silver, so I didn't miss out on this year, but I was looking to deploy more into copper, and I did some, but I've been waiting for a buying opportunity. I do think there's still some Trump shop to go here, and there's still a chance of a buying opportunity. But if not, gold was breaking out and breaking out and breaking out. We had lots of gold headlines, and we talked about how that might bring more generalist investors in. It's sort of fun, but also a little bit scary to see silver headlines on CNBC or Bloomberg. There was a video that went around a couple of days ago about, will silver head higher? And it wasn't silver or gold bugs. It was one of these mainstream media outlets. I forget which one. But the funny thing is it didn't tell us anything new, anything we hadn't heard already about the shortage in London of physical and people flying silver around, all that sort of stuff that we've talked about for weeks now. But people got all excited and people wanted to know, what do I think about this video? And so on. Well, I think they're telling us what we already know. But to answer the question, I think I have two minds on this. On the one hand, I'm long, and despite people calling me Darth Silver and all these things, I own plenty of silver stocks. I'm very happy to see along. I've never been a bear. But I have to say, I'm not sure I really want to see silver catching up with gold, because, even your most diehard silver bulls will tell you that silver lags gold at first in a bull market and then more than catches up at the end. It's not the catching up part I have a problem with. It's the end part I have a problem with. My analysis is not technical, it's fundamental, and I don't see any reason for this bull market to end anytime soon. That's like saying the money printing is going to end soon. It just never happens. That said, the bull markets do end despite the money printing. So what I'm saying is, if silver bulls are saying, this is it, silver's finally going to have its day in the sun, it's going to have more, it's going to beat gold, be careful what you wish for, because if that's what happens, it means the end of this bull market is nigh.
Long-term investors know silver rarely leads at the start of a bull market. Instead, it lags gold before unleashing powerful late-cycle gains. That surge, while thrilling, is historically tied to the final euphoric stage of a precious metals bull run. Today, the gold-silver ratio is declining from multi-year highs, echoing patterns seen ahead of past blow-off tops. While fundamentals remain strong, a rapid silver outperformance could be a warning that the cycle is entering its final phase. Investors may celebrate silver's catch-up moment, but history suggests caution. Strong outperformance often marks the beginning of the end, not the start of a new chapter.
It seems like there are signs here and there that this would be the final blow off top, right? The third stage of the bull market. I mean, one that I look at is the gold silver ratio, and it's below, it was around 80-1 for quite a while, and then it has broken down to about 70-1 now. It doesn't seem like close to where we've seen in the past, but it definitely is falling, which is typically what we see during that blow off top. What do you anticipate if this isn't the end of the bull market within the next few months, maybe year? What do you anticipate for the metals going forward here?
Well, I'm bullish on anything real that governments can't print. I'm particularly bullish on monetary metals, safe haven assets. If you, dear audience, think that the AI valuations in the market are a bubble, that bubble pops, I think that would create a lot of demand for safe haven assets. As we all know, if the market actually crashes, I'm not just talking, rolling over and politely, slumping down to more reasonable valuations. If there's an actual crash, everything gets whacked, absolutely everything, including gold at first, during that initial liquidity crunch, and then it goes soaring. If that happened for anybody who gets it, that could actually be an absolute gift on the part of the market. That sphincter's, opening moment, like in 2020 or 2008, I wasn't in the market in 1987, but I understand it was a similar thing, right? The wrong things go on sale, and that is an absolute, the best times you could have bought gold in my career or during the crash of 2008 and the flash crash of 2020, both of those saw screaming rebounds afterwards. So we might see something like that if the AI bubble bursts. And if not, broadly speaking, I think the writing is on the wall of the inflationary agenda in the United States. Even if you agree with Trump, the Doge did not save us $2 trillion. And the tariffs are being walked back and negotiated down. So I think the agenda is highly inflationary. Europe's rearmament is highly inflationary. Russia's war is highly inflationary. Even China, at long last, has finally got some consumer price inflation going again. So, that's bullish for monetary metals. And then to sort of the not just the geopolitical risk, but the awareness of how rickety the financial house of cards has gotten. I think, I can't prove this, but I think it has a lot of mainstream investors, deep-pocketed, not just institutions, but individuals, family offices, that sort of thing, saying, maybe I should hedge with a bit of gold and maybe some silver too. So all of this is very bullish, whatever happens long term. And I feel a bit odd saying this when we're at or near record prices in gold and silver, but there's actually not a very strong case for gold going down. The strongest case we could have made recently was, gold went screaming up to 4,400. That was too fast, and it has to be a correction. And then the question was, would that be a peak or would it be a plateau to another high later? And I wanted it to be a plateau, but Mr. Market doesn't care what I want, right? So we had to see. And I think it's pretty evident right now. It certainly wasn't this kind of peak. It wasn't a 1980 intraday type peak. It looks like 4,000 is the new 3,000, and we're consolidating before moving higher. So overall, bullish all around. It's a crazy thing for me to say at these levels, but that's the way I see it. And sorry, let me come back to the point of your question. If I'm bullish on gold and I'm bullish on anything real, how can I not be bullish on silver, right? That having been said, if I'm right in my fundamental analysis and that we still have a long way to go with this market, then that argues for actually silver cooling off a bit here. Maybe it kisses 60, that sparks some profit taking and it cascades a bit. But if silver crashes all the way down to 50, the silver miners will still be printing money, like literally pulling money out of the ground, real money. So I don't think that would be a disaster at all. I think to the degree that something like that put the silver stocks on sale, again, that would be an opportunity. And what might make that happen? If it's true that, demand out of India is, and front running of tariffs and critical minerals rebalancing, this sort of thing has put a squeeze on the physical markets, I think that rebalances. And again, I'm not a bear here. I'm not arguing against silver, but I think that would be a good thing. That would set the stage again for consolidation before moving higher. And if that's not what happens, if we're really at that blow off top, the good news is, okay, everything will go higher. The bad news is that whenever it, peaks, that we're likely then to go into bear mode for some time. So yeah, again, Mr. Market doesn't care what I want. I would prefer it wasn't the blow off top just yet. But if it is, if we start seeing things going parabolic again and gold confirms silver's move, then actually I would deploy more cash. As crazy as it sounds to say, yeah, I'm going to jump on all-time highs, if we're looking at that blow off top, then yes, I would put more money to work trying to profit on that. And I mean in the stocks. Bullion, I always buy on the dips. That's my savings. I'm always willing to accumulate bullion. That's not what I'm talking about. I'm talking about, speculating for hockey stick gains on the stocks.
In an environment dominated by inflated tech valuations and fears of an AI-driven bubble, safe haven assets are regaining importance. Should markets endure a sharp correction, not a gentle pullback, gold and silver may initially dip during liquidity stress, but historically rebound with extraordinary force. Events like the 2008 crisis and the 2020 pandemic crash show that panic can create rare buying opportunities in monetary metals. Meanwhile, global inflation remains embedded. Europe's rearmament, China's reawakening consumer demand, and persistent U.S. deficit spending all reinforce the bullish case for precious metals. The world's financial foundations look increasingly fragile, driving new mainstream interest.
I got a yes and no on that. Clearly when those things happened, the headline about Hassett came across, we saw an instant response in the markets, the broader markets, as well as gold. I don't remember silver wiggle that day, but I do remember that it was good for gold that day. And I think silver was sympathetic. But then things go back to the way they were. And at this point, that Fed rate hike, as you say, that the market's in near certainty, that's priced in. There may be a small move on the day of, but as we've seen, when this happens, when the Fed does exactly what's expected, the FOMC release comes out and nothing happens. It's when Powell exercises his jawbone that things can happen. That's harder to price in, and more question marks about well, is Powell? He's on his way out. Is he gonna capitulate and just go more dovish because he's on his way out anyway, or is he on his way out so he's gonna just tell Trump to stick it where the sun don't shine and just double down on his obstinacy? I don't know. I don't know how you handicap that. Maybe Kelshi or Predict It or one of these places will have some sense of that. But that's just people's accumulated guesses. I don't know. Answer to the question is, I think these things are marginal. The debasement trade, and I think it's hilarious that Wall Street has suddenly discovered the debasement trade. We've been talking about this since 1971, but that is gold bugs. But that is a real thing, and it's durable, and it's irreversible. If people ask me, well, how high can gold go? I always answer, well, how long can governments keep printing money? Where is the end of that process? So if you're not worried about the shorter term fluctuations, and by the way, if you bought the very peak, like if you just had the bad luck to jump on the bandwagon or listen to some evil scum of the earth newsletter writer who says he's going to buy the all-time high, right? If you did that in 2011 and you bought gold at the very top in 2011, you would have more than double your money now. Okay, it took 14 years, but it happened, right? So if you pull back and look at the big picture, if that's your basis for action, I really don't think you have all that much to worry about. And of course, almost nobody top ticks a market. Most people have done better. And if people had courage of their convictions and they bought the slumps, they bought down in 2015 near the bottom, then they would have made much, much more than just double their money. So, the good news here, I think, is that for hard money advocates, liberty and finance audience types, you know what's going on in the real world out there. And if you're patient, you stay the trades, you buy low, sell high, you can do that repeatedly and make a bunch of money. If you're not in the money making phase of your life, you're in the wealth preservation phase of your life, then, don't lose the faith, brothers and sisters. Your real money is what it is. And we all know, whatever the Fed may or may not do, those 25 basis points or not, that's not even icing on the cake. That's just superfluous almost. Small time noise.
Gold and silver may be hovering near record territory, yet the foundation beneath these prices remains remarkably firm. Recent corrections have behaved more like consolidations than endings, suggesting the bull market still has considerable room to run. Gold stabilizing near historic highs indicates shifting global sentiment. Investors are treating it less as a speculative asset and more as a form of financial insurance. This long-term structural demand makes deep declines less likely. And for silver, even a pullback toward lower levels would leave miners highly profitable and could present strategic opportunities for investors seeking discounted exposure before the next upward leg.
When I make that call, people ask, what do you like best? What's your favorite bet for the coming year? And it's become sort of a tradition. And I've made it copper again. When I say that, that's not to say I think that's the one that's going to go up the most. I'm looking at, the answer is risk adjusted. It's the one that I have the greatest confidence in, the most solid bet. And it's more specifically, the real question is, Lobo, where are you going to deploy your money? I was already long gold and silver, so I didn't miss out on this here. But I was looking to deploy more into copper, and I did some, but I've been waiting for a buying opportunity. I do think there's still some Trump shop to go here, and there's still a chance of a buying opportunity. But if not, my outlook on copper remains so bullish for so long, I'll just add more copper to my portfolio. So the answer to your question is, like, if we get the blow off top soon and gold and silver go into reverse, they're not going to have a great 2026. If we are building that plateau, if this is the next shoulder before the next head in the chart, then gold and silver will both outperform copper. I have no doubt about that. But that's an if statement, not a when statement, right? A Rick Ruleism, never confuse, if and when. So whereas copper, I see that more as a when. And the pushback here I get is, nobody wants electric cars anymore, so that's going to make copper demand go away. No, it's not. It's Dr. Copper. It's a fundamental industrial metal. And sure, extra demand from EVs it helps copper, but that's not the basis of the speculation here or the market, really. And people say the same thing about AI. Oh, the AI bubble is going to blow up. That's going to be bad for copper. Well, probably short term it would, and that could be the very thing that gives me the buying opportunity that I've been hoping for if that AI bubble bursts. Because it's certainly, and actually this you didn't ask, but this also applies to uranium. Both uranium and copper, and maybe even to some degree silver, have become AI plays, and that could blow up. That doesn't change the overall fundamentals for any of those metals. But if the AI bubble does blow up, it would almost certainly be bad news for anything that's gotten an extra tailwind from that AI play right now. So, all of these things could happen or not, but at the end of the day, you still have to have copper. You're still going to wire houses with it. You're still going to need it to wind motors. You still need it for all the gazillion other things that you need copper for. And that's not going away while the supply remains constrained. So I'm looking at it from, like, as a miner, right? The supply and demand of the market. And so I just have a really high level of confidence in copper going forward, whatever the short-term volatility of the markets does. Whereas, as much as I love gold and silver, if we get that blow off top, things could reverse sharply.
Short-term market movements often hinge on Federal Reserve commentary, but the broader trend is shaped by something far more enduring: currency debasement. Decades of expansionary monetary policy have cemented a system dependent on continuous liquidity, ensuring the long-term relevance of gold and silver as wealth preservation tools. Whether rate hikes pause, continue, or reverse, the structural forces, debt accumulation, geopolitical uncertainty, global consumption growth, remain intact. Historical perspective shows that even buying at absolute peaks can yield substantial long-term gains, provided investors maintain discipline. For wealth preservation, precious metals continue to serve as a stabilizing anchor amid an increasingly unpredictable economic landscape.
One of the guys on my team recently asked me if there was a price at which I would buy Bitcoin. And, if it drops to 70 or 50 or 10, would I buy that? And my answer was no, actually, because I can't wrap my head around what is the valuation. What do I know what the value is of Bitcoin? I know what the price is at the moment. And sure, prices are determined at the margin, whatever people are willing to trade at. But if the valuation is hard to figure, that price could be highly volatile. Michael Berry just did an interview, and he said that Bitcoin was absolutely worthless, and it was ridiculous that people would pay anywhere near $100,000 for it. And one of my followers on Twitter pointed out, this is an ignorant thing to say. If people pay that is the price. Well, that's true, but if the reason why people pay for something goes away or changes, then the floor can be cut out of under that. So I don't want to go too far down here because I'm not a crypto analyst. I'm not an expert in these things. But for that very reason, I have never owned Bitcoin, and I have never felt FOMO. If I did buy Bitcoin cheap at $1,000 or whatever, and I had 100 bagger on it, then getting lucky on that gamble, getting lucky buying something that I didn't understand and could not defend would actually encourage me to be reckless and gamble again and maybe lose even more than I made on that Bitcoin bet or something. That just runs contrary to the disciplined speculation based on understanding and my knowledge of mining stocks or mining companies or the specific individual issuers that I was taught by my teachers. So I'm not one of these people who hates Bitcoin. Actually, I think the crypto crowd did us gold bugs an enormous favor by teaching entire younger generations about the dangers of fiat, which old boomers were never going to convince them of. By the way, shout out to Lynn Alden in her book, Broken Money. Okay, she's more pro crypto, as you probably know, but that book does a fantastic job explaining so many things that you and I, and I'm sure most of the people in our audience, have believed for decades and have not been able to explain to younger people. Lynn Alden just did it. Classic case of what I'm talking about. So I don't know what Bitcoin should be. I don't know if it's going to go lower or not. But since I don't know, I'm out, and I'm perfectly fine to be out.
While precious metals dominate headlines, industrial metals like copper may offer equally compelling opportunities. Despite short-term volatility tied to the AI boom and EV sentiment, copper's essential role in global infrastructure, electrification, defense spending, and energy transition remains unchallenged. Supply growth continues to lag structural demand, creating a long-term bullish setup that outlasts market hype cycles. Even if a tech sector correction temporarily weighs on copper-linked equities, the underlying fundamentals remain strong. And unlike newer speculative assets, such as cryptocurrencies, copper's value is tied to real-world necessity, offering investors a grounded, confidence-building alternative in an era defined by financial uncertainty.